Good evening, everyone. A big welcome to our guests and our partners. This is the first comprehensive CEO survey by Mint and Bain and Company to assess, gauge business confidence and business outlook. Quickly, let me introduce and welcome our distinguished guests, Niranjan Hiranandani, co-founder and managing director of Hiranandani Group. A big welcome, sir.
Thank you very much. Thank you for inviting me.
Zarin Darwala, CEO of Stenchart India.
Thank you.
Good evening, ma'am, and a big welcome for being here with us.
My pleasure.
Devendra Chawla, CEO and MD, Spencer's Retail.
Thank you.
A big welcome, sir.
Thank you very much.
Vivek Gambhir, Director, Godrej Consumer Products. Welcome to this evening. It'll be a delightful conversation with you, sir. Gopal Sharma, Senior Partner, Bain and Company, who made this survey happen. Welcome, sir. Let me also introduce my senior colleagues and editors, Sunit Arora and Deborshi Chaki.
Thank you, Vinay.
Let me start with a clean slate and kickstart this conversation with a very simple question. Are we through with the pain? Have we readjusted to the new normal? Or is there more adjustment to come? What is your take as a representative of India Inc.? I would ask this question to Mr. Hiranandani first. Mr. Hiranandani, sir.
Thank you very much for inviting me. I'm pleasure to be over here. And I must tell you that the virus is insidious. The virus is strange. The virus is unknown. The virus doesn't really get captured yet. There is no vaccine in the immediate future. And hence, the kind of way that we will deal with the vaccine is unknown. The economic repercussions have been very, very strong and negative. And certainly, we do feel that only when the vaccine comes in or the situation in terms of a herd immunity builds up, I don't think the economy can get back to track. However, the positive elements are that sectoral improvements have definitely taken place. And I think, in spite of the fact that the overall economy is in the negative, unemployment is high, we still are seeing green shoots in many of the sectors, and things have certainly started improvement. For example, in the real estate sector, the migrant labor is now coming back in herds. Earlier, we lost about 1/3 of our labor. Today, every day, we have 40, 45, 50 laborers coming back on a daily basis. So we do see things turning around very well. And our reports indicate that in many sectors of the economy, things are fine. But there are certain sectors, including real estate, which is quite struggling as an overall picture. However, we are seeing green shoots even in this sector. So you will have some companies in the real estate sector actually have already sprung back or on the way of springing back completely, though you cannot say that is true for a majority of the real estate companies, or it is so. So sectoral improvements definitely happening, and it's wonderful to see that happen.
Yes, there's actually been a mixed sectoral view here. But one thing that has come across quite clearly from all CEOs is the problem and the pain where there's lack of consumer demand and even fears about economic and social unrest, which would be post-pandemic. Devendra, would you like to take that on and see that what exactly, how deep is this problem and what could be the mitigating circumstances?
Thanks, Vineet. I'll actually take on from where Mr. Hiranandani left. I think the answer lies in by analyzing sector, the pandemic or the crisis, or let's say it's the same storm every industry went through, but everybody's not in the same boat. Some boats are sailing much faster or easier than the others. And clearly, the pandemic has not impacted every business equally well. Like I can tell you, being in the consumer side of the business, as an omni-channel retailer, even during the initial days, there was a huge pent up demand. So it started actually on a high, then went down to a little bit of low and then recovered. In fact, we have another retail chain called Nature's Basket in Mumbai, Pune, and Bangalore. It actually saw double digit growth in April, May, June, contrary to the trend. And in fact, in such a time, a company broke even or became EBITDA positive at least, which it was not earlier. So I think it all depends which industry you're in, and things like within FMCG or whatever we sell, maximum is food. Let's say 70%. The food part is held on pretty much on its own right throughout the pandemic. The non-food personal care, home care started on a but is now recovering. I think there is a challenge still on apparel, fashion, general merchandise. These are categories where within our businesses we still feel some stresses there. And if I go outside my industry, I think sectors like automotive, hospitality, airlines, I think there has been some setback, and they will surely recover. To my mind, it will take some quarters, and definitely the concerns of unrest, socially or economically, would be playing on everyone's mind, including mine. And obviously, the answer lies in how quickly the vaccine or herd immunity or a solution is found for things to go back to normal. Because this is actually not just a business issue; it's actually a social issue as well, as you rightly pointed out.
So actually,
Right.
very pertinent point, Sunil, if I can just quickly come in, I wanted to ask Ms. Daruwala. You were telling me the other day. In March it was March, end of March it was complete despair, and since then things have only gone on an improvement to a large extent. And there is a lot of debate also whether the recovery is going to be gradual or V-shaped. What are the early signals that we're picking up from the economy?
Yeah. So I would like to bucket in two parts. If we look at moratorium phase one and phase two, actually, as a banking sector, we saw about 31% in phase one. But in phase two, it's about 18%. And if we look at the bounce rates, where customers bounce their post-dated check, we've seen a drastic reduction happening actually in the last 2 3 months. Similarly, if I was to look at our supply chain finance clients, a lot of them, almost majority, went for moratorium in phase one. When I say supply chain, it's dealer vendors of large corporates. About three-fourths of them have actually not opted for the moratorium in phase two. So to my mind, that, and they actually they have reduced their working capital limits also. So that is to me green shoots. Having said that, if I look at our credit card spends, actually it's down 33%. And what we see in that is that discretionary spends are not there. So people are spending for, as was mentioned about food and this thing, but discretionary spends have come down. So it's a mixed kind of recovery that we are seeing. Some sectors, as was mentioned, have bouncing back or have bounced back, and some will take a while to come back. And to that extent, I would say two things that are really helpful. One is the government guarantee scheme, ECLGS, which already 1,20,000 crores has been disbursed by the banking system, and 1,50,000 crores has been sanctioned. And that is a large sum of money which has flown to MSMEs. that's a really, really very, very important thing that is not talked about, but to me, it's a sizable sum of money that has gone in the hands of MSME. And we all know that those are big employers of people and big on exports also. The second thing which will help again the stress sectors is the one time restructuring window, which now banks will be looking sector by sector and giving the helping hand. I think some of these measures will stabilize the deficit in cash flows for a lot of corporates.
Okay. Vivek, would you like to take the consumer confidence bit on, please? Your sense of the consumer confidence, which has been listed as a major concern.
Can you just repeat the question? I lost
Okay,
signal
no
there.
problem.
Yeah.
Can you take on this question about low consumer confidence? I mean, most CEOs have listed it as a major concern, as well as the possibility of economic and social unrest post-pandemic. But since in the consumer confidence is something that we would be keen to hear your views on.
Yeah. Yeah, I think clearly as we look at FMCG consumer demand, and Devender was saying, it's not a one-size-fits-all approach. So you are seeing significant variations by portfolio of companies, along with the strategy each company is employing. But ultimately, I think FMCG growth will depend on jobs created, income growth, and consumer segment sentiment. Consumer sentiment is still on the lower side. Consumers are being very cautious, and they are waiting and watching. The anxiety levels are still quite high, but the outlook, I think, is improving month on month. The situation today probably is better than 2 or 3 months ago, but we're not out of the woods yet. What is happening is that I think consumers want to conserve cash. And so what you're seeing is consumers gravitating to much more value and value consciousness groups. Basic food supplies, as Devender was saying, are doing very well. Discretionary products are still taking some time to recover.
Right. Right. Um, Discretionary is an area where we've also got extremely poor numbers, as well as real estate, of course. Gopal, there's been, of course, much talk about infrastructure being the highest on the wish list of CEOs, but our government, of course, is telling everyone that they have no money. So, what is your sense of an infrastructure-led push coming into reality?
That's a great question. And I think, as you said, the big challenge for this coming into reality is the lack of resources, because a lot of the cash resources have actually gone over the last couple of quarters into short-term revenue support measures, and which were necessary at the time and will continue to be necessary. And we've actually seen the impact of that in terms of at least partially shielding some of the most marginalized segments from the impact of what's happened. But in the medium term, to actually see growth come back, we are going to have to create opportunity in this underbelly of the service sector, including construction, infrastructure, real estate, because some of the other segments in the service sector are not going to recover anytime soon. Our own estimates are travel and hospitality will take at least 18 to 24 months to even start the upward climb back to pre-COVID days. The other challenge that we need to be aware of is many of the sectors that are suffering now were actually on a bit of a downturn even coming into this situation. We saw somewhat of a slowdown in areas like auto. We saw challenges in some of the other sectors. So, and as many of the panelists have said, there is no one size fits all. But at the core of getting to recovery, and we've seen this in many other economies over the years and over multiple crises, that investment capital expenditure on construction and infrastructure is one of the single biggest drivers of rapid recovery. And we'll soon get to a point where the government may be forced to ask itself questions around the challenge between managing inflation versus supporting growth and allowing some more capital supply back into the economy. to literally kickstart growth through capital investment in infrastructure.
Right. I'd put that question also to Mr. Hiranandani because obviously a lot of the jobs action as well as on ground would be in real estate construction, and so what? And some of the numbers that we got from the sector were actually amongst the poorest, next to media, I must add. Would you take that, please?
Uh, yeah, as I said, it's not one size that fits all. I think that describes it very well in the construction and real estate segment because there are lots and lots of green shoots that we are seeing sectoral wise, or company wise, or project wise, or location wise. So there is a distinction between the sector and in a wide variety of ways. So, for example, let me tell you that in the last 3 weeks, for example, we got such huge sales in ready products, in ready flats and apartments, that it surprised us completely. And we are not talking about affordable housing segments, but we are talking about 2, 3, 4, and even a 5 bedroom apartment in terms of close to ready or ready apartments. So we are seeing this kind of a green shoot, which has definitely started, and people are buying, and things have started to happen. So I'm positive. What is worrying me is the spending on infrastructure. And I think there is something drastically lacking because no country can get out of a depression or the situation that it is with a negative growth without a huge infusion in infrastructure development, infrastructure, as Gopal Sarma just mentioned. And I think without that input that we have, our recovery is going to be fairly slow. But the secondary impact of that slow recovery is even more disastrous, which is that the unemployment, which is very high at this point of time, especially among the migrant and other workers, will not get jobs. And though I'm not so worried about the people of India, they are too docile to rebel. But having said that, we are going to see a lot of pain in the economy, which is unbelievable. And the shame of the country, of course, has been that the migrant workers had to walk 1,000 kilometers to go back home, and the trains are too little and too few for them to come back in the time that they want to return to their locations. So I think a lot of things need to be fixed by the government in terms of it, whether it is the stuff like demand creation. I think we need some input, infusion into infrastructure, big requirement. The only sector which I think in the housing, which the government is pushing very hard, is the affordable housing segment, where 1.1 crore houses are being supported, and government has put in almost 50 to 60,000 crores of rupees in terms of interest subvention of 3% for 15 years. And I think that's a segment where the push has been pretty strong by the government and is being maintained. So again, as I said, different segments of the economy happening, but disappointment in the infrastructure investment, too slow, too little, much more needs to be done.
I have a question. It's a little, aside from what the government can do. My question is to Mr. Hiranandani, and then the follow-up would be to Ms. Darwala. Sir, a lot of respondents in our survey have said that this pandemic that we are facing is going to fundamentally change the way we look at things. Now, talking about real estate sector, there has been a talk of correction. People have been talking about a correction for years now. Is this the time where there will be some kind of correction in certain segments? Similarly, if I can, my follow-up question would be to Mr. Darwala. Now, when you're going to be restructuring loans, I'm guessing you'll have a lot of them. Not your bank per se, but as a sector, as a banking, there will be a lot of restructuring. What kind of questions you're going to ask people who are going to come to you for restructuring? Are we going to ask to redefine their business models? Are you going to ask them to prune fixed costs? What are the things that you're going to look at, and from what lenses? Mr. Hiranandani can answer first, and then we'll go to Mr. Darwala.
Yeah, good question. First of all, you have to understand that in the last 3 to 4 years, there has been no increase in prices. And with inflation, whether it was 4%, 5%, 6%, on an average, I think it was between 4 to 5% at least. With no increase in prices, the prices are actually corrected quite a lot. So that part of it is definitely happened, though it is in a subtle sort of way. But in spite of inflation and cost inputs going up, the prices are not getting corrected. There are again separate desperate sellers who, because of lack of liquidity, requirement to pay back their loans and other situations in terms of repayments, are selling at distressed prices. And those transactions are definitely taking place in the economy, but they may not be reported in the formal economy. But a large number of transactions do take place for the purposes of these things in happening. Also, consolidation is not taking place in a direct manner, as would normally happen in any Western economy. So, in a Western economy, when the recession of this kind hits the real estate business, consolidation takes place in a very overt manner. Banks foreclose very quickly, all the other things happen very fast, and new people come into it, and so on and so forth. In India, it's a very slow process, and hence many of the people are able to bide by the situation to which it happens. But some sort of consolidation will definitely take place in the real estate space, or is indirectly taking place by some development manager models and joint ventures which are taking place. So you will see that definitely happening, but doesn't happen as quickly and fast as we normally see in Western countries. But that's the way our system works. It's a bit slower in terms of consolidation. And in a way, we, by postponing this issue of giving more time in terms of foreclosures, in terms of extending time, obviously has helped many people who are even doing badly before the COVID situation really took place.
Yes.
Absolutely.
And just to add to that, the moratorium on some of the legal related issues that has been placed is going to just further increase the time frame for consolidation, which otherwise was potentially a good opportunity to actually get the industry, so to speak, a reset and enable the survival of the players who actually have strong balance sheets and who are going to be able to ride through this current crisis. Where that is going to get postponed. I absolutely endorse and agree with that, Mr. Hiran.
So let's hear it from the banker who's going to restructure that.
Yeah. So I think as a banker, for us, fundamentally, what we look at is the industry sustainable post 2 years. And if we take the example, for example, of cinema halls, clearly after 2 years, yes, you will have a problem for 1 or 2 years, but the industry will bounce back, and that's the call as bankers we would take. The second important issue is that what is the kind of cash flow mismatch, and is the promoter also able to bring in a little bit of equity or figure out a way to sort of reduce the debt? That is important, because if you just keep adding debt for the 2 years deficit of cash flows, it may become unsustainable. So I think the Kamath committee has defined a broad framework of kind of the ratios that we'll have to look at. That will be the guiding principle also. But to my mind, the one-time restructuring certainly helps clients who were perfectly in good health pre-COVID and have had a COVID-related impact. It will certainly help those clients.
Okay, continuing with the theme of disruption, the services sector has shown the maximum amount of disruption in our survey. And my next question is to Devender and then subsequently to Vivek. What level of change are you seeing in the way you operate, and how far-reaching is it? Devender, first you.
So I think my answer, Sunit, is very. I think things models get disrupted, and like crises always lead to adoption of new technology and business models emerge. For example, when SARS happened in China, there was adoption of e-commerce started in a big way, and it gave rise to Alibaba. I think currently also in the same way, we all can see in practically every industry digital adoption coming in and models also changing. For us, e-commerce, even though we've always been omni-channel at Nature's Basket and Spencer used to be a single-digit number, and now in both the companies is double digit, and in one company a very high double digit, like a percent of a business comes from e-commerce. I think it's also visible digital adoption even in public health education. If you see, and there's a saying that something nothing happens in a decade, and some things a decade happens in a week. I think we are experiencing that fast-paced change despite this lull, and we all are at home, and in a manner it seems everything has stopped. But I think in a manner under this calm, a lot of fast-paced change is happening. I think the rise of OTT, I mean, on learning online, the rise of omni-channel or e-commerce. I think these are here to stay. Some bit of it may go back post-pandemic, but some bit of it will remain. And I think doing business and the way of serving consumers is also evolving. And I think the only underlying theme common to all industries would be technology. So disrupt or be disrupted is the only option left for practically every business. But all successful disruptive business models keep customer at the center. And I'll say that while we talk too much of technology or new ways of doing business, and it seems like the saying of the day, but I think keeping customer at the center of the business would be most important. And while technologies have evolved, we see new models like subscription model, platform businesses, premium, the rise of omni-channel, video selling, whether it's on social media or WhatsApp, I think are becoming very relevant, which nobody had thought can happen pre-pandemic. Another big shift which I'm seeing is that earlier businesses could manage on their own. I think now the post-pandemic world is even seeing a faster transition to what we call the ecosystem of partnership. That I think you need to learn to survive in a ecosystem where other companies, other services will be partners with you. For example, we never thought, like in retail, we've been there for years and years, that like on 23rd March, on the first day of lockdown, our demand went up 6 times of home delivery, and the staff went to half. So six into half, 12 times. You don't have people. What do you do? The public transport is shut. Buses and trains aren't working. All people aren't comfortable coming to work or to the store. We could keep 90% of our stores open even then, and we tied up with Uber at an Asia, Uber Asia team. We spoke to, tied up, and we had 1,000 cars the next day. And something we'd never thought before, like on a bike, a person can carry like 2 orders of grocery and can make 6 to 7 deliveries a day. So one human being can make 12 to 14 deliveries, but an Uber car could make 40, 30, 35 to 40 deliveries in a day. Same one human being. So who would have thought that we would work with Uber for a couple of weeks, months, and end up making much more deliveries. So these are, then we work with many startups like Zip, Rapido, Scootc. These are partnerships we had never thought we'll be making before the pandemic. So I think these
Right.
partnerships will remain in the coming times, even post pandemic.
Right. Vivek?
Yeah, I think as Devender was mentioning, clearly we are seeing a massive amount of transformation that is happening in business models, tech-enabled disruptions, largely fueled by significant changes in consumer behavior and habits, which is leading to lots of opportunity, but also challenges for companies. The other part, of course, we are seeing is more internal in terms of how companies are learning how to change their ways of working. I think over the last few months, companies have operated on significant adrenaline, and you are seeing, particularly in the larger companies, massive amounts of innovation happening. Product development timelines have crashed from months to days. You're seeing significant amount of collaboration happening, and even the larger companies have discovered a huge amount of speed and agility. I think going forward, companies have to first of all figure out how to not snap back into their old ways of working, and then second of all figure out how to really thrive in an increasingly hybrid world. I think some employees will be working from home, some are there in the field. So companies really have to figure out how to adapt themselves to be working and thriving in this hybrid model. And there are two, I think, areas of concern that we'll have to keep on watching out for. One is, around how do you really shape culture? How do you shape culture of a company when your team members are so fragmented across different locations? And then second of all, what really happens to productivity? So far, it's been adrenaline rush. I don't think any of us have fully figured out how to keep on looking at productivity going forward. So I do see significant opportunities in the way companies have transformed their ways of working, but there will be these inevitable challenges that companies will have to grapple with as we look at the next normal.
Right. Gopal, in the survey, when we looked at disruption, one thing was quite evident that in terms of regulatory changes, most of the CEOs felt they weren't expecting much to happen. Uh, what would you say, Gopal, would be some of the changes that we could have on a regulatory front, which could help businesses during this period? You're mute, Gopal. Can you just unmute
Sorry,
yourself?
can you hear me now?
Yes.
So I was about to say we can spend a lot of time discussing that question because there's clearly a lot of progress potentially that we can make on the regulatory front.
But
But I think,
specifically, urgent things that we can tackle now.
yes, so if I were to look at some of the urgent elements, we've already talked of some of the issues in the banking sector. The one element that I would like to call out specifically is we've recognized that construction and infrastructure spend is going to be a critical driver of growth going forward. And there are some pretty urgent requirements of reform on some of the regulations specific to finance and banking for construction and infrastructure. And it would be great if we could have some disproportionate focus there, anticipating that we're going to see that sector rebound with more orders coming in and the government actually putting more money into the sector. But even if the government puts more money in, unless companies themselves are not enabled through some of the banking reforms requirement, whether on restructuring, whether on better working capital limits, whether on some of the issues around guarantees that currently are proving challenging, we will require these reforms to happen for the sector to keep up with any spend stimulus that actually comes in. That's one. I think the second I alluded to the legal issues specifically around the moratoriums that we're placing on NCLT in sectors like real estate will actually postpone some of the consolidation that can potentially happen. So while clearly, yes, we require this kind of support, we'll also need to figure out is there a way to qualify that and make it more horses for courses rather than an industry-wide level of support. Because what we're otherwise doing is just postponing the inevitable. I think the third area of reform that we actually have a great opportunity now is to take a hard look at some of the issues on how do we enable labor to be more productive. I know the issue around labor reform has been a vexed one for many, many years and decades now. But this actually gives us an opportunity to view that from all stakeholder sides and make sure that we're creating structures that are fair to all stakeholders and at the same time take advantage of some of the adrenaline that Vivek was talking about, some of the innovation that's happening across all businesses, and actually provide opportunities to reskill and upskill without necessarily penalizing entities that are looking to be more efficient. So, in my mind, three core sectors: what we need to do for infrastructure and construction, what we need to do at an umbrella level on labor, and what we need to do specifically on some of the NCLT and consolidated relationship issues in real estate, but this applies across industries.
Sure. Sure. I was going to say act of God as is another issue that has become a regulatory issue or could become a regulatory issue across the board. Uh, but I want to just switch to jobs where obviously a lot of the bottom line benefits that firms have accrued over the past few quarters have been on the back of salary cuts and of course layoffs. I wanted to get a sense from Zareen to start with, and then the rest of the panelists on how do you see the jobs market shaping up, because that is key to consumer demand also then picking up, and if there's insecurity all around, this is going to it's going to basically have a spiral effect. Zareen, could you start with that, please?
So I think the job loss is more in the unorganized sector that we see more than the organized sector. In the organized sector, we've seen more of a salary cut or a bonus freeze or freeze on hiring. And clearly, a lot of that unorganized sector labor has gone to the rural areas back. Having said that, the government is really spending a lot on the rural areas, as we've seen in the Pradhan Mantri Narega scheme, for example, they've increased by 40,000 crores. Pradhan Mantri Garib Yojana, where again government is spending a lot. We've seen states like Jharkhand really spend a lot on water conservation. West Bengal again, under that same scheme, is trying to convert fallow land into wasteland into productive land. So we're seeing a good amount of rural spending happening. But I guess it will be a while before the migrant labor comes back, and that period is where we'll see the demand be sluggish on a macro level from this segment of the population. Also, as I said, even in our credit card survey, we saw that 33% less spending is happening, which is discretionary spending is still people are holding back. So it will be a while before people get the sense of security of jobs, and the whole sentiment also sometimes plays a very big role in demand revival. So it will take a while before these things come back to normalcy.
Vivek, I'll go back to what you had asked or generally dwelt on earlier. Is this old ways of doing things and new ways of doing things? Do you think that we have reached a tipping point where we will do only the new ways? Or are we going to slip back into the old ways? Because I don't see a tipping point.
Yeah, I think that is a big area of concern for every company, right? How do you really avoid snap back into the old ways of working? I do believe that particularly from the larger companies' point of view, I think they've just been able to find ways to really get their mojo back. So I think for every single of the larger companies, their big worry is, how do you really sustain these new ways of working? How do you find greater ways to collaborate, as Devendra was saying? How do you find ways to partner in the ecosystem, as Gopal was saying? How do you find ways to be able to upskill your employees? How do you invest more in learning, talent development? So I do see a lot of effort that is happening. Too early to say, but I think the biggest worry most CEOs have is to ensure that they can actually learn from the pandemic and try and make their operations far more resilient and far more future ready. So even with supply chain, for instance, I think companies are trying very hard to make the supply chains more flexible. As Devendra was saying, digitization has really become one of the most important themes across most companies. So I do believe that there are a lot of enabling factors which give me some hope that companies have learned from this, and you will see far stronger companies. But the jury is still out there, and we'll only know about this over the next few years or so.
Right.
Devendra, would you like to take this question, because you have been saying what normally takes a decade will happen in 10 days? Are we a little bit optimistic about that, or do you think there is going to be a reversal to practices that have held steady and kind of created status quo structures? Would you
So
like
let
to
me,
comment on?
yeah, so let me start from where Vivek left, and I completely agree with him. And even as he was speaking, I was thinking that the challenge is we are the same human being who act as consumers and who are also professionals or as CEOs or management. Now, to my mind, I have no doubt, personally, my view that at least let me speak for 30 seconds on the consumer side that whenever whether herd immunity or vaccine or whenever the solution is found, let's say end of the year, Jan, Feb, March, whenever. I mean, I have no doubt people will go back to restaurants and people go back to bars. And even as we speak right now, 80% of our footfalls is back in the store. And I'm speaking nationally, not in one city. It's like I'm talking of 40, 50 cities, including metros and mini metros. So 80% of people are coming back to the stores and buying. I have no doubt this number will be much larger. So to that extent, consumer behavior, we will go back to pre-pandemic habits. But let there be no doubt, it will not exactly go back to some bit of omni-channel digital buying from consumers, delivery business which they've got used to, or OTT, or watching more content will stay with them. But it won't exactly be what it is right now. Now, when it comes to companies, what Vivek alluded to is a big fear. I think, to my mind, if companies or management, and I mean, this is like saying if we don't change and move faster, this is the pandemic has come like a rude shock. There's a pace at which managers, whether CEOs, companies, are used to changing. And the problem with us all is that we are all data led, and there's always a past data available. That rate of pace of change, there's a graph we are used to. All our life is around a graph, whether it's a digitization, adoption, rate of change, growth rates, companies becoming digital, whatever you may call it, there's a past data. And most of managers I've seen are used to extrapolating and making decisions. I think the pandemic has broken all those rules. And no, like I'm telling you, for Diwali, which is coming festive for consumer companies or retailers, we are totally lost because all algorithms, heuristic, and past data is not serving any purpose. If we go by the large big days that we have in 15th August, which went by, or the Raksha Bandhan, there is no relationship of what sold or how much sold than any of the last 10, 15 years. So I think change has to happen. There is no choice, and it would be scary if people fall back on older methods. So I will differentiate between the consumption of consumers and management style, or the way we work.
Mr. Hiranandani, you spoke about how real estate is one of the favorite sectors of the media. They cover it extensively. So I'm sorry, we keep on asking you questions. I just wanted to ask you: is the nature of the city going to change? We're seeing London changing, and most of the cities worldwide changing because of the pandemic. And if that does happen, how will it pan out, and how will it impact the real estate sector?
Uh, Sorry to tell you that my 35, 40 years of experience shows that the intent of the governments, local authorities is usually positive, visionary, far reaching, thoughtful, beautiful, wonderful, and nice. But when you come to the action on the ground, we find it lethargic, old fashioned, political, bureaucratic, slow, impossible, zero infrastructure. Look at Mumbai, the richest financial city in the entire country. 50% of my population lives in Jhopatpattis. Now, there was no need for them. Half of them can afford a house if they were given a house of the size which they wanted to have. But for 35 years, we were not allowed to make smaller houses and use the entire FSI. So that went totally against making smaller houses of that. Now we have moved the other end of the chain. Let's start making smaller houses. But look at the decrepit infrastructure that we have. Do you know that in the entire city of Mumbai, we don't recycle 8 million liters of water, sewage water, while my two project sites at Powai and Thane recycle 4 million liters of sewage every day and reuse it for the purposes of various other things like flushing and other things. But the whole city of Mumbai doesn't do it. So when it comes to thought process, ideas and thoughts, the governments have been, as far as cities are concerned, extremely good, but very behind. Look at the railway pattern, the metros and other things. We are now doing metros. We should have done this 30, 40, 50 years ago. I mean, the metro should have been there. So all these things in terms of infrastructure development of cities, hopefully will become change mind. But it's a very good thought process, a lot of policies. I worked on 3 master plans of Mumbai, the concept of slum redevelopment. I was a co-signatory to the draft of the redevelopment of slums, the development plan of Mumbai, various things. But when it actually came to action on the ground, ultimately for the purposes of development of my beautiful city, it's horrible. So, I mean, something which we are not seeing on the ground. Hopefully, praying that things will change and what we have planned for the cities will be better. The intent is definitely there, but how will we actually act it out? God only knows. And I do hope that I'm wrong in terms of the future rather than the past. So our track record hasn't been good, but maybe post COVID, our mindset and actions will be more faster and better and proactive on the city. The metro program of Mumbai of 300 kilometers of metro certainly point out to a positive direction in terms of how they are planning infrastructure for cities like Mumbai. And I think there is a positive into it. But if you want to grow at a double digit growth for India, if you want to do the $5 trillion economy, if you want us to compete one day with the size of China and economic growth, you have to do much more.
Yes.
So, yes, you are doing good, but are you doing enough to really get our country out of poverty? The answer is no, it's not enough. Are you doing enough that will make it into a double digit growth in next 2 years? The answer is no, not enough. So while I am happy with many of the actions which have taken place, very positive actions, and I can recount 20 of them, I'm not still happy to say enough that are we going to be able to reach that level of growth and prosperity that India deserves and needs and the cities should have? That's my question. And we need to answer that very quickly for the people of India, not because of any other reason, because they deserve it and it can be done. If it couldn't be done, I wouldn't even bother to mention it today.
So you're saying there's one big player out there, which the government or the planner, who is not pivoting at the speed that we would want to pivot, who has been kind of in a status quo frame all these years. And now, despite the pressures, that we are not seeing that movement at all from one big party out there, who is a fundamentally the the entity which is going to impact us. Is that what? And you spoke about bureaucracy on one side and the government on the other.
So I'm not concerned about anything else. I'm concerned about my people. I'm concerned about my city. I'm concerned with keeping the city clean and beautiful and prosperous, something which we deserve, which each and every Indian deserves, and we can get it. My question is what we can do and what we are doing. There is a big dichotomy, there is a big fasla, there is a big gap between the two. So it's not about them not doing it. So I can't tell you, oh, are we doing something? Answer is yes, of course we are. We're doing this. Is it enough for India to reach the next level? The answer is no. So that's my concern. Are we doing enough? You want to compete with China? The China's GDP growth is what? 10 times India? And how are you going to catch up with it if your growth is going to be less than 5% or a negative pace of growth that you're going to do? How are you going to catch up with China? How are you going to give employment to our people? That's my question. So we need to push more. I'm not saying they're not doing it, but I'm saying, please, it's not enough.
Okay, just moving a little bit to old ways and new. One of the things that we found that the long-term view around work from home was very subdued. Uh, Everyone at this stage wants to do work from home, and I presume, I'm sure at least Zareen is working from office right now, but the rest of us appear to be in homes. But in general, companies say that we will come back to only 25% of our staff, more than around 25% of our staff will be working from home when the pandemic ends. Do you think this work from home is something that is a myth, and then everything will come back to normal? Zareen, would you like to take that on?
Yeah, so clearly at this stage, I think all employers are taking the view that whoever is comfortable coming to office only should, and that's true for us as a bank also. Having said that, I think we're seeing a change in customer behavior and the way they're interacting also. So, if we look at our own bank, 99.5% customers are now digital in the corporate side, and even on the retail side, virtually 100% of our onboarding now is digital in cards and personal loan. customer behavior is changing, and because of that, it's much more easier for employees to work from home also and sort of engage customers digitally. We, of course, are in a regulated industry, so it is a function of what the regulator permits. But having said that, I think the services sector, it's far more easier for people to work from home than in the manufacturing sector. And I think one good outcome of this will be that women who earlier would sort of, after a particular period, sort of sidestep from their career because they couldn't come to office. I think this will really enable women to work from home and be sort of managing the work and the home front much more in a better way. And to my mind, that is a very important development that we'll see play out for mid-career time when women take a break.
Right. I wanted to ask one very fundamental question that has bothered us since the days of the early days of lockdown. Supply chain disruptions, has been the topmost concern. Things have obviously improved in the last few months. Now, going forward, what kind of changes you're going to see? I mean, since we have this episode and we've realized what are the pitfalls, of over dependence. Now, I'm also talking about this in the context of what is happening with our immediate international neighbor to the north. My question is to Mr. Gambhir. Sir, what kind of changes do you see going forward? What kind of safety measures which will be in place, safety walls which will be in place as per companies,
Yeah.
manufacturers such as.
Yeah. If you look at supply chain operations for most companies by June, supply chain operations had more or less come back to pre-COVID levels. So what's happened over the last couple of months is, again, we have seen micro lockdowns, where lockdowns have been happening in specific geographies. So the start-stop actually in supply chain operations still continues, and supply chain operations are actually not fully normalized that. So as we look forward, I think one is we will have to get used to this inevitable volatility in supply chain operations. And to be able to mitigate that, what a lot of companies are doing is, first of all, investing a lot more in technology, investing a lot more in supply chain visibility to be able to try and build predictive models to see, to the extent that they can mitigate these shocks, what can they do? The second, as you were also mentioning, is that certainly, I think for companies which were over dependent on China, a lot of them are trying to find local sourcing. So this should also be a big boost for, I think, local manufacturing. Gopal had talked about the importance of investing in infrastructure to boost economic growth. The second big pillar really has to be around manufacturing. So I do believe some of these regional imbalances will force companies to look for broader diversity of supply chain operations within India. And then the third piece will be digitization of the supply chain, whether it's Internet of Things, automated ways of working, robotics manufacturing. You will start seeing Industry 4.0, Manufacturing 4.0 becoming quite important. So far, honestly, for FMCG companies, it was largely marketing and sales led. Supply chain had been relegated as a back office function. But I think over the near term, availability will become a very big competitive advantage. And so you will see again supply chain operations becoming front and center as far as future competitive advantage is concerned.
Okay, since we're running out of time, let me put the question to Gopal and before tossing it to Vinay. Continuing with this supply chain theme, one of the things, Gopal, that came across in the survey was that when respondents were asked what the government should do, Atmanirbhar campaign came very low. At the same time, many CEOs talked about localizing their supply chains and looking to de-China themselves or whatever. How do you explain this dichotomy?
So I'm not sure it's a dichotomy. If I were to look at the connotations of Atmanirbhar in the minds of most CEOs, I think it goes way beyond just supply chains. It goes around self-reliance on most manufacturing operations and technology.
Sure.
But very heartening to see the response on how they're actually addressing some of the supply chain shocks that Vivek was talking about. And just two specific elements I would like to call out. One is we've actually seen a lot of traction on what we're loosely calling the China plus one strategy. And this is not just for Indian companies, this is for many global companies who are now looking to diversify globally their supply chain risk. How much will India benefit? I think it's totally contingent on what we do on infrastructure and on the cost of supply out of India. But definitely for companies that are India centric, have manufacturing operations here, huge opportunity to develop alternate sources of supply, which can also, to a large extent, help address, not entirely, but help address some of the micro issues that we spoke of on micro lockdowns, temporary disruptions in supply. So I think that's one fairly significant opportunity that is going to emerge. I think in the medium term, and this goes back to some of the data that you've seen on the survey, a lot of the initiatives that corporates have taken, whether it's on cost, whether it's on supply chain rationalization, I think they're expecting that in the medium term, this will actually help them rebound a lot better. So just if we make sure that we don't go back specifically to some old ways of working, incorporate agile, incorporate digital, incorporate supply chain reinvigoration, and China plus one development of local alternate suppliers, I actually believe we could have an overall reduced cost of manufacture, but we will need to wait 2 or 3 years to see that really playing out and helping companies perform better in the medium term. But I think the view that we saw in the survey is medium term things will get better. And some of these shocks will actually help companies perform a lot better than what they're doing today. But back to you.
Vinay?
It's been a very delightful conversation, very insightful. One of the words that has been used many times is ecosystem. There's been an ecosystem of partnerships that's coming up, new partnerships, ecosystem of entrepreneurs, an ecosystem of suppliers. Uh, there is also another ecosystem which is important for the growth of the economy and of India Inc., which is the ecosystem of opinions. And the ecosystem of opinions has the media at the center. We have been asking you guys a lot of questions. Do you have any questions for us in the media? I mean, how do you want us to help you in this path to growth? Mr. Hiranandani, if you can, you could take the first question.
I'll give you one small example of the difference that media has done in the last 1 week. Every time a government would do something for the real estate sector, it was said bonanza for builders. This is the first time when the reduction in the stamp duty rates came out, they were clearly saying that this was needed for the economy and for the people who are actually buying apartments and all. So the media does have a great influence in terms of being able to actually moderate the thought process in the segment. And since the government has to do a lot of strong action in terms of investment into a positive way, the stories of requirement of what they need to do. The second, what they did wrong, for example, the ready reckoner rate, instead of being reduced, got increased in the last 1 week. I mean, there was some statement that it was increased by 1.6%. But Mr. Deepak Parekh has recommended that it should be reduced by 15%. Now, that hasn't come out at all in the media. It would have been a great job if a huge criticism was made of these times. So I think media plays a very big role, an important role, in order to set the tone which the bureaucracy will follow.
Zareen, would you want to take that question?
So I think clearly we've seen a lot of responsible media reporting, especially I think the whole migrant story that came out really led to the lockdown in a way being eased up. I think clearly certain parts of media have really played a very important role. Having said that, I think one important thing is now, as was discussed in the panel, is that private sector investment will come later. It has to be preceded by government spending in in a meaningful way to kickstart the economy. And to my mind, that's a real focus. And the media can sort of, really sort of look at that as an agenda in terms of that is what I feel will kickstart the economy in a very meaningful way.
Devendra?
So I I think in today's time, media plays even a more important role than before, because we could go out, meet people, form opinions, go to too many conferences, meet up people in the evening. But now, when you have the work from home, by and large, you're spending time with your teams, your company. So whether it's content coming through the newspaper or through digitally, I think that's the way we all form our opinion and the way we spend or consumption, or as Zareen said. I think it's very important to continue to build on credibility when it comes in. I think one needs to guard that in this world of a lot of fake news, how consumers will see this world emerge, or even consumption or coming back. To my mind, media has done a great job in this whole recovery, which is happening in the way stories or the way reality has played out. I would only call upon to continue to that as credible it has been, because all of us depend on it, frankly.
Vivek, your take?
Yeah, I think, Vinay, the objectivity and incisiveness of you and your team, I think is very critical at times like these, because there are so much noise and we are all surviving in sound bites these days. So we do need credible debates around what it would take to get the economy back on track. As Mr. Hiranandani was saying, the potential of the country is fantastic, but we are going through a pretty rough patch right now. So we do need the media to be able to shine a deeper light on potential solutions and what needs to be really done to get the economy on track. Far too many side issues end up dominating the headlines today, and I really would like the media to keep on focusing on some of the issues that truly will matter going forward.
Gopal, your take?
Gopal, you're on mute.
I think the panel has made some great points. The one thought I'd like to leave with all of you is, in order for the recovery to really happen and to happen rapidly, we are going to have to take some very tough decisions. Some of the decisions are going to be popular, some are going to be very unpopular. And I think the one role that the media can play is to shine a light on these decisions and encourage an objective debate. Very often, we get carried away by one extreme or the other, and it's very difficult to actually get an objective outcome. There's either a lot of criticism of decisions or blind following and support. And as we go through different decision points as part of this recovery, whether it's on regulation, whether it's on banking, whether it's on infusing money into certain sectors, I think it'll be fantastic if the media can shine a light on these and encourage an objective discussion that really encourages the best outcome for the country, because ultimately I think that's what all of us are looking for. But I think guys like you have played a critical role coming this distance and can play this role continuing go forward. So thank you very much.
We at Mint believe in the ecosystem of opinions, and I think the media has a good partner in India Inc. And we think that India Inc. is a partner that we should journey along with. Thank you for your views, your insights, and helping us to take this survey to a level where we have views from every sector. Some of the views that have been discussed have kind of converged with the survey we did, and we hope to do another survey soon. Thanks to all of you distinguished guests. Thanks to my colleagues and partners, especially Bain and Company. Thank you very much.
Thank you.
Thank
Pleasure.
you.
Bye-bye.
Thank you.
Bye-bye.
Thank you.